U.S. nat gas futures plummeted on Tuesday, weighed down by bearish fundamentals that overshadowed short-term cold weather forecasts. Persistent strong production and muted LNG export demand have amplified concerns over an oversupplied market. Weather updates have done little to offset the bearish outlook. A brief cold front is expected to sweep the Midwest and East from December 20th to 23rd, with lows of 0 to 20 degrees Fahrenheit in the Midwest and the South seeing brief drops into the 20 to 30 degrees Fahrenheit range. However, the broader 15-day outlook suggests limited sustained cold, keeping demand tepid. While recent forecasts added approximately 20 heating degree days over the weekend, mild conditions across the southern and eastern U.S. have tempered demand. At the same time, the market remains watchful for potential disruptions that could arise from the anticipated severe cold weather in January. However, the immediate outlook points to a market that is comfortably supplied, with robust production levels and relatively mild demand keeping a lid on concerns. While colder temperatures could shift the balance later in the winter, the near-term fundamentals, including high storage inventories and sluggish export demand, suggest little pressure on supply in the coming weeks. The near-term outlook for natural gas remains bearish as robust supply and weaker LNG demand offset weather-driven demand increases. Technically, futures have returned to key support levels. The January contract is testing the 50-day moving average at $3.08. A sustained break below this level could push prices toward the main support at $3, which analysts see as a critical point for further selling pressure. However, a sustained move above $3.12 would indicate buying interest and could signal a potential bullish reversal. Traders are closely monitoring the $3.12 to $3.08 range, with a bearish tone likely to dominate below $3.10. Please like, subscribe, and comment to support the channel. See you in the next one.